The Trump tariffs are officially live, and the stock market did not like it. The tariffs on Mexico, Canada, and China sent the stock market falling, and in this video, I want to go over number one, what's going on with tariffs, what does it mean for the economy, and finally, what does this mean for the stock market and your investments? So without further ado, let's jump right in. President Trump has officially signed a 25% tariff on Mexico, a 25% tariff on Canada, and an additional 10% tariff on China. I say additional 10% tariff on China because there was already a 10% tariff put on China last month in February. Well, Canada, Mexico, and China, not surprisingly, were not happy, and they all responded to the tariff. Canada's Prime Minister Justin Trudeau responded by saying, quote, "The tariffs are a dumb thing to do." And then the Canadian government put out a statement saying this: Canada will not stand by as the United States imposes unwarranted and unreasonable tariffs on Canadian goods. And then they go on to say that Canada is putting a retaliatory 25% tariff on the United States, up to $30 billion worth of goods. But if the tariffs are maintained, then they might raise that cap up to $155 billion worth of goods. China also responded. China responded by announcing that they're going to impose tariffs up to 15% on United States goods for key farm imports. That includes things like chicken, pork, soy, and beef. And Mexico responded by saying that they're going to impose tariffs on the United States as well, but they're not going to announce this until Sunday. And they're hoping that they can diffuse some of these tariff tensions before then. So we'll see what actually ends up happening with the Mexico retaliatory tariffs in the coming days. So why are stocks falling? Well, Best Buy CEO and Target CEO kind of gave us some insight into this. The Best Buy CEO went on to say that for their company, around 55% of their products are sourced from China in some way, shape, or form, and another 20% come from Mexico. And because of that, Best Buy expects much more of the impact of the tariffs to be seen in quarter 2, 3, and 4 of the year, not right now. And that it's, quote, literally impossible to know how much of a hike consumers will see. Remember, tariffs are a tax. It is a tax on consumption, essentially, that if you are a buyer of these products from Mexico, from Canada, from China, you as the buyer are going to have to pay a fee, a tax to the government for buying that product from one of these foreign countries. But let's compare this to what Target's CEO said. Target CEO said that the Trump tariffs on Mexico may force Target to raise prices on fruits and vegetables as soon as this week. They went on to say that Target heavily relies on Mexican produce, especially during the winter. And these are categories where Target will try to protect pricing, but the consumer will likely see price increases over the next couple of days. So Best Buy says you might not see price hikes for a little bit. Target says you might see price hikes in a couple of days. Now, this is one thing that I've been talking about for a little while, but there's a lot of changes happening in our economy very quickly. And this is why on March 11th, I'm hosting a free workshop where I'll be going over, number one, some of the changes that we're seeing in our economy, from tariffs to Doge to artificial intelligence. And then number two, how all these things create an investment opportunity, because the reality is all these changes create volatility. Volatility creates an investment opportunity. It's a free workshop. I'm doing it twice on March 11th, once in the morning at 10:30 a.m. Eastern Standard Time, and again in the evening at 8 p.m. Eastern Standard Time. So if you want to join, it's free, but you do have to reserve your spot because there's a limited number of people that can actually join me live. And well, seats are filling up pretty fast. So if you want to join, I got the link for you down in the description below. Now, moving on. What are we importing from Mexico and Canada? Well, Mexico is a big producer of produce, and they're also a big producer of cars. Canada is a big producer of cars, lumber, machinery, and plastics, and China is a big producer of a whole lot of things. And this is where I want you to understand why tariffs matter. Again, they are a tax. The first thing is the goal is to drive some additional revenue into the United States government. That's one of the things that Trump has talked about. Trump has also talked about potentially reducing and or eliminating the income tax through the tariff tax. Now, I've already made a couple of videos highlighting this and also outlining Trump's new tax proposal for 2026. So I don't want to go over the whole tax stuff in this video, but there's a lot of tax cuts that are being proposed. And so the goal is to hopefully pay for some of these tax cuts with the tariffs. Will we see success with that? I don't know. But we're still doing a lot of budget cuts as well. So the government needs revenue in order to pay for the spending cuts, and this tariff should hopefully pay for that. Again, we'll see what ultimately happens. The second thing and goal is to bring manufacturing into the United States. Now, we've already heard of a number of companies that have decided to either A, move factories out of Canada, Mexico, and China into the United States, or reroute building manufacturing in Mexico, Canada, or China and bring those into the United States. The whole idea being, if you produce your product in Canada or Mexico or China, it's cheaper. Well, if you have to pay an additional 25%, now it's not so cheap. Now it might be a comparable price, maybe even potentially cheaper, maybe a little bit more expensive to produce that product in the United States. But if you produce that product in the United States, another thing that the Trump administration is proposing is a tax cut for businesses. Essentially a tax incentive if you produce a product in the United States versus if you produce a product outside the United States, you also have to pay a higher corporate tax. So it's a double benefit or double whammy. If you produce a product in a foreign country, number one, you'll have to worry about a tariff. Number two, you'll have to think about higher corporate taxes. So it's a way to, number one, drive some more revenue for the government. Number two, a way to hopefully incentivize businesses to bring jobs back into the United States. Now, when we take a look at what is this going to mean for the economy, obviously the inflationary issue is the most easy to understand, because if businesses have to pay a higher price to produce this product, well, the ultimate buyer is a consumer. And businesses have two options. They can either A, absorb that cost, so I reduce my profit margin, or B, I'm going to sell it to you for more money. Now you can start to see why that's difficult for a business, because in an era where a lot of consumers are already struggling, where inflation is still a problem, raising prices can make it much more difficult to stay in business. And that's where a lot of people are concerned about the economy. People are concerned about a recession. People are concerned about how it will impact the economy in a lot of different ways, especially in the short term. But that's why. Because they're concerned about this affecting the prices of things, this affecting businesses, this hurting business sales, this hurting business profits. And as a result, the stock market was also hurt. Now, this is where I do want to talk about investments in the stock market, because we saw quite a bit of a knee-jerk reaction as soon as the tariffs were passed. Now, a lot of people are hoping that maybe the tariffs will be paused again, like what we saw happen in February. We don't know what's going to happen. I don't have a crystal ball. I have no idea what's going to happen. Of course, I'll be keeping you posted here and in my free newsletter, Market Briefs. So if you haven't subscribed yet, make sure you do so. I got that link for you down in the description. But the thing that I want you to remember as a financially savvy investor is that the people that actually build wealth as investors are not the ones that are freaking out when this news happens. Because unfortunately, when this news happens, the financial media have a field day, because they get to publish a whole lot of articles that are very exciting or scary or some sort of emotion to make you want to click. And at the end of the day, what every savvy investor is doing and what Wall Street is doing, I want you to understand this, because they're getting rich when these things happen, is they're looking for the opportunity. Because guess what? When tariffs happen, you bet there's opportunity. If you take a look at the stock market, when the stock market was in free fall after the tariff announcements, there were some things that were also going up. For example, gold prices were going up. Why? Because people were looking for more of a safe haven. So investors that were holding on to gold, well, they had a payday while everyone else was losing over there. In addition, Bankrate recently published this article on their website. They said that the Case-Shiller Index reported that home price gains hit another all-time high. So real estate investors that were sitting on properties, well, they also got a win. The reason why I'm saying this is because no one knows what's going to happen in the market, and we know markets go up and down. Unfortunately, a lot of people don't know that. There's a lot of newer investors out there who are also traders, that when you see markets go down, people panic and say the stock market's a scam and that it's rigged and you're never going to be able to make money. The first thing I want you to understand is this. Markets go up and markets go down. This is nothing new. This has been happening forever now. Market crashes are a part of our economic system. We have seen approximately 25 market crashes, bear markets, in the last 100 years. So yes, markets go up and down. You have to anticipate that. The last time we saw a real bear market was in the year 2022. In 2022, the stock market fell by around 20%. Before that, 2020 had a bear market. 2020 had a market crash, but then the Federal Reserve Bank opened up the money printer, and we went from the fastest stock market crash in the history of time to the fastest stock market rally in the history of time. Those were just a few months apart. But the reason why this is important for you to understand is, number one, understand investor psychology. Warren Buffett says it the best: be fearful when others are greedy, be greedy when others are fearful. If you are a long-term investor and markets are falling, well, that's a potential buying point. Now, we really haven't seen that big of a market drop. I mean, we're still pretty close to our all-time highs. I mean, we're not anywhere near anything scary. But if markets keep going down, it could create a good buying opportunity for those that are financially savvy. Secondly, this is where it also helps to be a well-diversified investor, to be able to withstand all types of things in the markets. And when I say well-diversified, I should say this. Number one, I'm not a financial advisor. I'm just a random guy on YouTube. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence. And if you have specific questions, talk to a financial advisor in your area. But when I say well-diversified, I mean investing in multiple different asset classes. For me, and I can't recommend what I do to anybody else, this is just what I do. My main investments are, number one, my own business, Reeves Media. Number two, physical real estate. Number three, stocks. Number four, speculative, which is startups that I invest in and cryptocurrency. And then number five, physical gold. Well, there's always going to be winners and losers. Every time there's a winner, there's also a loser. Markets were crashing. Gold prices were booming. Markets were crashing. Housing prices were going up. And this is where, if you have a truly well-diversified portfolio, well, then you can win in all different situations. When the 2022 market crash happened, real estate prices were breaking new record highs. When the 2020 market crash happened, gold prices were going up. In 2012, when real estate prices were hitting rock bottom, the stock market was booming. So understanding that asset prices move in cycles, but they don't always move in the same cycle, can help you withstand storms. But when it comes to the stock market particularly, understand that there's opportunity in chaos. But it requires you to, number one, stay calm. The number of people that are freaking out over tariffs ruining the stock market in one day is really unfortunate, because it causes people to make real decisions with their money, which they may end up regretting in the future. Now, again, I'm not telling you what to do, but you got to understand the game. You have to know your strategy. If you just want to invest in the economy, you can follow something like ABB, always be buying. And with that, you set up a system where maybe you buy something like the total stock market or the S&P 500. These are funds that can give you exposure to the broad economy. The S&P 500 is a group of the 500 largest companies in the stock market. So there are funds. For example, SPY is an ETF that will give you exposure to the S&P 500. For example, VTI is an ETF that will give you exposure to the total stock market. If you buy one of those ETFs, well, you get exposure to that thing. You get exposure to the broad economy. And now you just always be buying. Markets are going up, you're buying. Markets are going down, you're buying. That's what always be buying means. If you're more of an active investor, I'm not talking about trader. I'm not a trader. That's gambling to me. For those of you that are active investors looking for more unique opportunities, this is where you're looking for market shifts. Guess what? When tariffs happen, there are certain companies that benefit. For example, logistics companies. If tariffs happen and they achieve their goal to bring manufacturing back into the United States, what does that mean? That means that the manufacturing plants inside of the United States will need to transport products from one plant to the other. Well, certain railroad companies could benefit because of that, or other logistic companies that have to help transport those goods or maybe build those manufacturing facilities. This is the way that investors are thinking. They're not thinking in terms of emotion. I get it. There's a lot of political emotion out there. I know. But at the end of the day, if you really want to find the opportunity that's going to help you and your family, you have to look for the opportunity, not the emotion. And it's difficult when everybody's selling emotion. but I want you to try to stay calm and look for the opportunity. Because at the end of the day, getting angry is not going to help your bank account. But if you stay calm, you can start finding the opportunity. So, a lot of things going on with tariffs. Things are probably going to be changing. Things will probably change between the time I record this video and publish it on YouTube. Stay tuned. We'll be keeping you posted here. We'll be keeping you posted on market briefs, which is my free financial newsletter. And of course, you can join me on my workshop, which is right around the corner on March 11th. All those links are for you down in the description.